You're watching SBA Today. With all the latest news, stories, and advice, here are your hosts, Paul Long and Tanya Mazurek.
Hello and welcome to SBA Today, presented by Res Title, your SBA title experts for the week of June 10th. I am Paul.
I'm Tanya, and we're going to be joined by a very special guest today that Paul likes to call him the SBA Godfather. However, I like to say he's the guru of SBA. You can tell the difference there. And that's Mr. Lance Sexton. Also, Lance is going to talk about the new rules and things that he's been seeing on how this whole thing's been going down with the changes in the landscape. But first, we have some quick news. Actually, say hello first, Lance.
Hey, it's great to be here with you guys today, and it's always fun to talk about changes at SBA. I've been doing this for a long time, and there have been as many changes in the last couple months as I've seen in the history of SBA. So fun to talk about these.
That's why you're on, buddy. That's why you're on.
I was going to say, sometimes fun, sometimes not fun. So we love having you on here to liven it up a bit. Anyway, but first, Paul.
Yeah, so there's just a couple things on the news. SBA announced that it will no longer review loan applications for affiliation. That is, so the hold code 803, they're no longer doing that. Another thing that, again, I just wanted to give a reminder to everyone is Cavers is back into your world, not the E-Tran world. So it sounds like to me they're really dismantling the I forgot what it was called, but the pre-thing that was supposed to make everything wonderful.
Well, they're putting the onus of figuring out if there's an affiliation or not back on the banks, guys. Period.
Yeah.
Right?
Absolutely. Lance, what's your thoughts on that?
So the 50-10, 7 and 7-1, suddenly SBA started taking some responsibility for eligibility of a borrower or eligibility of a guarantor. And for whatever reason, SBA has put back the requirement to make eligibility determinations, particularly in the area of affiliation and, some simple things like running Cavers reports. But SBA is putting some of the requirement to determine eligibility back on us.
And again, I think that does bring us back, I think, our PLP a little bit more than it did before, which pros and cons, right?
Oh yeah.
As with everything, pros and cons.
Well, PLP lenders are seasoned lenders and should be able to make a vast majority of eligibility determinations. So SBA is putting that back on not just PLP lenders, but GP lenders still have to run the Cavers report and still will have to look and determine if there's affiliation.
Yep.
And I want to make sure that I specify out there that Lance isn't saying that only PLP lenders are experienced and whatnot, because there are some GP lenders out there as well that are experienced, that have been around a long time, that just choose to stay in the GP realm. So I just want to double check that so we don't get any kind of people out there saying.
No, I absolutely agree with that statement. In addition to that, when SBA came out with the PLP lenders must process everything PLP, there were some PLP lenders who wanted to give back their PLP lending status.
Yep. I'm really curious how many actually.
I was a back and forth with that, Lance. Paul and I talked about that a minute because we were so heavy in the GP space for so long, and then we're PLP as well. I was like, should we? Because we can go back into the previous world of getting everybody else's. But anyway, we did not. We stayed PLP, and I'm glad we did.
Well, the fun thing is I was told by a lender that typically your email boxes at SBA are not staffed by seasoned 20-year veterans of SBA. Quite often they're staffed by, loan servicing assistants or loan processing assistants that may not have all the answers that you need. but the new PLP questions email that's out there,
Yeah.
somebody sent an email into that address and actually got a response from somebody that's been around for a long time. So it blew my mind that they were actually servicing the email box.
See, that's why we have the Godfather on, who can share us.
The guru,
whatever.
the guru Godfather. Yeah. Okay. Anyway, okay, bring up the next one there, Paul.
Yep, the next one, and I don't know, Lance, if you watched it or not, but the budgeting testimony with Kelly Loeffler. Oh my God, that was so entertaining.
Is that what you call it? Entertaining.
I thought it was.
It was crazy.
Y'all have a weird sense of entertainment. No, I'm kidding.
Yeah.
Well, and again, this is where, again, just politics bug me in general, because there's so many talking points and they just repeat their talking points. Can we just get to the brass tacks and actually answer a freaking question? Like,
you mean not answer a question that's scripted from somebody on the back end that's already pressing it to go a certain direction? Come on.
Exactly.
They wanted to beat her up on the big, beautiful bill and her relationship with our Tesla friend.
And that, you know what? That has nothing to do with what we're trying to, like, stay on task. Whatever. I don't think
I have a hard time, and Paul knows this, Lance. I have such a hard time watching some of this. Well, news in general, right? Because of the spins that people put on it. Just in general, it's like I'd prefer to just go find the news after the fact versus watch the whole what they're doing and their stances and their it's just annoying. Right. Anyway, keep going.
Well, they did
on both sides, everybody's side.
They did say that 2,700 employees left the SBA.
Yeah.
And again, I really wish that they would say where. I know the disaster service center got hit pretty hard. But again, we have a lot of friends that have left as well of names that we've known. So and so I just wish they would tell us so we actually knew who was answering our emails, right? And who's picking up our phone calls. And
the fun part about it, Paul, is some of the changes that have happened with SBA recently, I think are a direct correlation with those changes and the reduced headcount. As an example, all servicing actions now have to be submitted to Fresno. Well, I was deputy director at the Little Rock Center, and I still know people there, and their head count is significantly down. And I think part of that move on the part of SBA is just to consolidate and make things more efficient. The same thing is true. All guaranteed purchases, with the exception of express loans, now go to Herndon. And we did have the option on smaller guaranteed purchases, even if they were just a standard 7A, to go to Little Rock or Fresno. But I think both of those moves are in relationship to the smaller head count. And the other rule that was we talked about previously, PLP lenders having to submit PLP, tells me that Citrus Heights probably got beat up pretty bad in terms of headcount loss. So, some of the rule changes, I think, have a direct correlation with the reduction in staff at SBA.
Of course. And they were talking about the inspector general, and that conversation is where I think when it really got fun. But they do apparently have a nomination that was submitted to replace Mike Ware, and so we'll see what happens on there. But if you ever like watching, the Jerry Springer show, just put on a Congress Budget Testimony Committee, and there's no difference.
I love that, Paul. That is absolutely how I saw it.
I was looking for somebody to come sprinting out of the back of the hall up to the front like they do on the Springer show.
Right. Exactly.
There were times when I'm like, who's going to come? Actually, when I watch these guys, I pull it up. I like to watch it live, but I also like to take the recording and just skip past the parts that it's like you said, Paul. I want to see the meat of the matter. I want to see them actually talk about SBA and the SBA budget. I don't want to hear about political issues over a bill being presented that has a little to do with SBA, but not very much.
Exactly.
Well, like typical though, is they bring things in that are unrelated in order to tag them with something that is related to get their points or their positions across, if that makes sense.
Yeah.
So anyway, all right. Well, Lance, gosh, okay, so we got through the couple of little news items we wanted to get through. So next we want to talk about the new rules that came out, which those were some of them. But anyway, the new rules that came out and what are some of the things that you have particularly seen. Specifically, first, have you seen anyone or any deals with the new seller note having to stay on or getting to stay on or being on in any way, shape, or form?
Right.
Well, just to share with you, many people know that I'm happy to share my email address, and I do it in Coleman and other places if you have questions. One of the most frequent questions I've gotten lately, and there have been a number of deals where the seller had to remain on for 2 years, and the sellers were wanting an answer, is an automatic release of the guarantee at the end of 2 years. How do I get released? And, right now, until we get additional guidance, the release of any guarantor on an SBA loan, so that seller that's on for 2 years, that release is not unilateral. That release requires approval by SBA. The other thing that comes into play on the change of ownership loans, let's say, and I've seen this happen a number of times in servicing, let's say borrower A buys a business and then, they don't perform. Their cash flow is not good. Mm-hmm. Well, do you think the SBA and the participant lending institution are going to release that borrower at the end of 2 years? My answer in servicing, if I had a change of ownership loan and cash flow was negative for the first 2 years, I'm not releasing that guarantor.
Right.
And I don't suspect SBA would approve it. So I think it does bring a challenge to the table for us, and it may potentially kill some deals. The do what you do rule said they only had to have seller financing on standby for 2 years, and it did not require their guarantee. And now we've got a guarantee requirement for a couple years. It's not an automatic release at the end of 2 years. Now, SBA could release a new SOP 5057, whatever, 4 or 5, and change that. But right now, that release of the guarantor is not guaranteed.
What's your thoughts of they just have to make 12 regular payments in lieu of the 2 years? I thought that was very fascinating when that came out.
Yeah, it's a little it's confusing at the same time.
No. Because anything in there confusing? Are you kidding me?
They're talking about a servicing action in the underwriting and closing SOP. And they're hopefully, and, I've talked to people in Washington, we have a new servicing SOP coming out very soon. And hopefully they'll address this. They're supposed to address this in the new servicing SOP. But, again, it's not automatic. It is something that has to be reviewed. And if the business, if the business is performing well, paying as agreed, it's going to be easy release. But sometimes
I was hoping.
Yeah. I was just going to say that's what
I was hoping that,
but as you can see, is did I just hear the 2 year guarantee from sellers is not automatic, and I think that's what Lance just said is if the payments are there, if everything's going smoothly, there's nothing really to kind of come back on. He thinks it should be an easy release. However, it isn't an automatic. Is that what we all heard, Lance?
Well, again, until I see otherwise, the current servicing SOP, the release of a guarantor in any circumstance requires analysis and a request to SBA for that release. So it's not automatic.
Now, one thing is, they came out with the new 148L, which improved and updated the time section of that. And it does say on the guarantee, how many, the guarantee will continue until the later of blank years after the final disbursement, et cetera. If they're signing a document that says this, to me, you should be able to do that unilaterally.
Well, you're correct, Paul. And I have a feeling we will see in the new servicing SOP, and we may see some language that addresses the release of those guarantors that are limited guarantee or by either term or amount or property. We may see some new language in the SOP that addresses that. But right now, if you look at the servicing SOP, the release of a guarantor is something that needs to be approved.
That's true.
Okay.
But if I was a seller, sorry, I gotta poke this. If I was a seller and I'm signing this 148 or this 148L, and it says on there 24 months, 2 years, whatever the case is, I mean, in court, I would say, hey, I don't care, lender, if you did or didn't. This agreement that I signed says X. I don't know. That's my.
Oh, I do think that a borrower could challenge it in court and most likely be successful. Yeah. But do you want to have to spend that money? I mean,
no, of course not. I just look at all aspects of the bomb.
but he digs in. My thoughts, the new servicing SOP will address this.
That's true. Okay, well, we beat
all
that.
All right, Lance. So how many issues, let's go on. How many issues with the new 10% down payment have you seen?
I have not had that many calls or questions about that because it's something most of us that have been around SBA lending have experienced before. I've said this before. I think I said it on the show with you guys once before. It puts all lenders on a level playing field. It really does. Instead of some, say, a non-bank lender that has a policy that says they can do no equity injection on loans of this size, and a lot of zero equity SBA loans being done, now all lenders have to get the 10% equity injection on startups and 10% on complete changes of ownership. So I haven't really seen that many deals that have fell apart. Now, I can pull up my sales team and they probably can share with me a few stories of deals that have fell apart because of that.
Yeah, but here's, I'm gonna go back this, and I did it before. I'm a believer in the 10%.
Oh, I am too.
I am such a believer in the 10%. I think that those are the ones that oftentimes were the challenging ones that created problems, which is why we're back to requiring the 10%, because excuse my language, if you don't have a pot to piss in, why in the heck are you getting money to do something else? You need to have something to put in yourself, skin in the game yourself in order to move forward. And I don't know. I think that I'm a believer in 10% period.
It's a good rule. And guys, we have to have SBA zero subsidy. And there's two components to that. One, they reinstitute the fees. Right. But the second half of it is guaranteed purchases have risen significantly as a result of some of the lending that's taken place over the last 2 or 3 years. And we've got to get that back under control. And Tanya, I agree with you. You got to have some skin in the game. 10% is not even, when I was doing regular commercial lending for a startup, we might ask for 30, 40%.
Absolutely.
Well, I mean, that's the point with SBA is getting it at 10%, not zero. It's always been 20, 30% or something on the conventional side, right? And the whole point with SBA is to drop it, not eliminate it. So I don't know.
Ray just said 10%, is light for startups, should be 25. And I agree with him as well. But I think here's the deal, though. I think this is where politics come in. And again, they want more businesses to start up, et cetera. And it sounds good from political standpoint. So 10%. Okay.
I want more businesses to start up. So it's not even about that, but it's about do your due diligence, do what you've got to do, have something in the background for yourself, I guess, to fall back on. So many people want to start up because they have this grand idea. I get it. I have lots of grand ideas, right? But you got to put something behind it other than just, I have a good idea. I mean, if you're not doing what it takes to get that 10% up front, what are you going to do down the road whenever something falls apart or you don't have a payment or something? How are you going to make that happen? I think it just starts it off correctly from the get-go.
True.
Anyway,
the next one.
Okay, go ahead. You read this one, Paul.
Okay. Small loans. We're now under 350. Do we have to take the house on small loans?
I have an opinion. I'm gonna let you go, Lance.
That's a trick question, Paul.
That's why I asked you.
Yes. The answer is yes. Now, being somebody who's spent a lot of my life in servicing, I wish the answer was no. I can't tell you how many liquidation projects we have where there appeared to be equity in the project. Say you have a $500,000 house with a $350,000 first mortgage. And you think, wow, there's 150. Well, it's going to take 25 to foreclose. When you sell the house, you're going to pay another $30,000 to the realtor for selling it. You're probably going to spend another 10 or 15,000 just insuring it, keeping it secure. So, what I like to look everybody in the eye and say, no, you don't have to take it anymore. But yes, I would. But you do.
Okay, Lance. Now I'm gonna come back at you on that one because I'm gonna say, what about though the mentality or what it puts behind those borrowers whenever there is the chance to actually just walk away from that business they started and they don't have anything on the line? What about the mental piece of it, of their house is on the line? Even if there's not equity, even if there's not, how many do you think don't go to servicing because they make it happen because they've got that house on the line?
No, I agree with you 100%. It's a commitment issue. And when you take the junior mortgage on the residential real estate, they're going to do what they can do to make sure the payments are made so they don't lose their house. But on the ugly side, on the liquidation side, I've seen people walk away from their house in a heartbeat.
Yeah.
So it's, but yes, Paul, the days of not having to take collateral on SBA small loans the same way we do on regular 7A loans, those are over.
Yep. And then last one here is, how are SBA fees hindering production? And this is obviously to all three of us, but you have a behemoth that you're a part of. So you start.
Well, most SBA fees are added back into the loan anyway. So I don't know that it's causing a problem with production at this point. We're seeing record numbers of opportunities for new SBA loans in our group. And I just don't feel like the fees are hurting SBA production.
Tanya, what about you?
I would agree because I don't know. Obviously, it's going to hinder, some of the smaller loans that maybe didn't have the fees. If you're talking guarantee fees to the borrowers for those under $1 million, right? Obviously, there might be less loans being done because those who don't want to pay that fee or can't afford to pay that fee, or it raises the loan to an amount that they don't want to do, is being affected, and there's probably less loans because of it. And again, it goes back to what I previously just said. Are those the loans that maybe shouldn't be done in general, which is where I'm going to go with it each and every time. Can you go both ways? Yes. Are there some that are being affected negatively that we wish weren't? Of course. But I think a large portion that are being affected are those that maybe should be affected.
Yeah.
And I would say, obviously with with us, I would say that it's not really hindering production at all. I mean, there was definitely a little, the transition of if you
Right.
had any deals prior versus after. Those were some fun conversations. But the for the most part, I don't think that it is. I think on the like small stuff, I think is where you see it. But then I go back to where you said, Tanya, if I don't know, $750 is giving you heartburn, is this really right? Come on now, So I'm with you.
Well, the hardest part of the whole thing is the participant lending institution now has to pay the ongoing fee on everything. And there was a period of time where they didn't have to pay it. So it improved the yield on the SBA loans during that time period where the ongoing fee was not required.
I don't think it's any different than when prime used to be 3.25%, and everyone thought that all money was you can get a car loan for 3%, right? And now you get a car loan at 7%, and everyone's it takes time to convert.
So I'm going to throw this out there real quick. Ray says, can we talk about the EIDL, so the EIDL subordination requests with regard to timelines? He's hearing 4 to 6 weeks. Lance.
I am also, Ray, hearing 4 to 6 weeks, and in some cases longer. I would like to see SBA address this because, getting the subordinations approved for new SBA 7A loans where there's an idle loan that exists, getting them done timely will help SBA production. The idle subordinations are handled at the disaster centers. And the disaster centers are like all SBA centers. They're understaffed right now. And, unfortunately, 4 to 6 weeks is exactly what I'm hearing as well.
So for you borrowers and you brokers out there, remember that.
Get started.
Remember that 4 to 6 timeline extra whenever there's an idle on the line with I guess.
This is something I always like to tell underwriters and closers and even BDOs. When you have an element like an idle subordination, get started early. I mean, it doesn't mean that if you request an idle subordination that, if for some reason the deal fell through, you're in trouble. But there are a lot of items in underwriting and closing that, I used to collect back in the day, the 4506T. The first time I met with the customer, because back then it was taking 4 to 6 weeks to get transcripts back. So first meeting, I'm like, now your loan's not approved, but I need you to fill out this form so I can verify your tax returns. I would collect that immediately. So those items that have time lag, get them collected early.
That's also with life insurance. For all you borrowers and brokers out there, your life insurance, get that going early. Let's see, what else? What are some of the others that are the
landlord consent?
Gosh. Yeah. So get those done as well. Well, Lance, oh my goodness. I don't know, Paul, I think we're out of time and stuff, but Lance.
Yeah, no, this was wonderful.
We could talk to you all dadgum day long, though. That's the thing.
Well,
it's so easy. There's so many things that you can tell us.
What would be fun, guys, is when the new servicing SOP comes out, I want to come back and let's talk again.
Oh, well, we're going to have you back. I mean, we can't get enough questions in on the short amount of time that we spend on these things, right? We just can't do it. So anyway, well, thank you for coming, Lance, and we've enjoyed having you.
Thank you.
And don't forget, we're live on Tuesday mornings right here on YouTube and LinkedIn. Otherwise, any of the streaming platforms where you get your podcast. Also, check out our family of podcasts, The Art of SBA Lending and the BDO Show. We will see you back here on Tuesday next week. And yeah, I guess between then and there, or now and then, we've enjoyed having you, and go be your big bad selves. So we'll talk at you later.
Be a good SBA
There
citizen.
You go.
That's right.
All right. See you guys.
Thank you.